we can now talk to Philippe Bodereau. He's Pimco's Global Head of Financial Institutions Credit Research and a Portfolio Manager, joining us from central London. And Linda Yueh, our economics correspondent, is also here. Philippe, let me just ask you about what this final solution, if I can put it that way, will actually look like. Let's talk about the recapitalization of the banks first. What are we expecting? What would you like to hear?
Good morning. So I think we are seeing growing consensus that this will happen within the next few weeks with announcements ahead of the European summit. We think that time has come for bold actions on the European bank recapitalization. There's been too much procrastination, but also and bickering at the European policymaker levels. The markets have been in such disarray in the past 2 or 3 months that policymakers will not be given the benefit of the doubt, and ultimately bank recaps will be an important part of the entire package.
Yes, and is using the EFSF a solution to that?
Right. So I think there's three dimensions that need to be addressed in any banking crisis, and I think we've had plenty of experience of that in recent years. The first point is that you need to address the asset quality, identify the problem assets. In this case, these are the peripheral exposures of European banks, whether they are to governments or to the private sector. And here, to deal with that, there's 2 avenues. One is that you need to address the insolvent countries like Greece, where basically you need a deeper restructuring, and you need to see banks take losses and write-downs. For the much more systemic and solvent economies like Spain and Italy, what you need to have in place is a lender of last resort. The UK has the Bank of England as a lender of last resort. The US has the Fed as a lender of last resort. In Europe, we just don't have that. The ECB has refused to play that role, at least in a consistent way. And now we've got the EFSF, but the EFSF, as it stands today, as part of the July 21st agreement, is just too small to take issues out of the table.
Indeed. Philippe, if I could jump in, please.
Yeah.
You are very active in the market, and certainly markets are looking for that final solution. So if the EFSF were to recapitalize the banks, would that be the final solution, or do you still think we need the ECB to play that role as well?
So I think that bank recapitalization are necessary, but not sufficient. In other words, it deals with the symptom of the crisis, not with the root of the crisis. And the root of the crisis today is the fact that Italy and Spain are trading government bonds, are trading at double-B type of levels. And as long as that's the case, you're going to have a huge amount of uncertainty in the market. So what needs to happen as part of this package is that the possibility, the discussion, or even the remote likelihood of haircuts on Italy and Spain need to be killed and taken out of the market.
Philippe, I want to ask you about a permanent solution to Greece. What does that look like, and how much time do we have?
So I think there is an increasing view that as part of the package that will be announced, that will tackle, ahead of the G20, so by the end of the month, that will tackle the EFSF, a beefed-up version of the EFSF plus the bank recap. That probably as part of that, you should have the Greek debt restructuring that basically goes deeper. I think we all, many observers in the market, including ourselves, have been saying from day one that the Greek package was doomed to fail. And I think you've seen that unravel in recent weeks. So I think what it looks like is that it looks like a deeper haircut for the private sector. I think that the European banking sector is well equipped in terms of capital levels to deal with such a haircut. But what you do need to have in place by the time you do the Greek, the deeper restructuring, you do need to have ring fencing and firewalls that make sure that Italy and Spain do not get further contaminated.
Philippe, could you talk us through a bit more about what you mean by ring-fencing Italy and Spain? You focus on liquidity there. What kind of liquidity would we need to see?
Well, what I mean by that is that I mean that you need to have someone who is willing to act as a lender of last resort to these countries.
And the ECB isn't keen on that, is it?
The ECB is not keen to do that. They want to push it on the fiscal side, and that's the EFSF. We also know that the EFSF, in its current form, is too small to sustain Italy and Spain for a long period of time, and therefore it has to be beefed up, or much more levered, so that it has a much greater firepower. And I think if you do that, then I think there is a good chance that you don't actually need to spend all of that money. That ultimately the announcement itself of a large number will probably be a powerful way to crowd in the private sector in investing in Italy and Spain again.
Philippe, is it possible to beef up the EFSF? Would that risk the AAA ratings of the guarantors and that stand behind the EFSF?
It's not clear at all. It depends on how you structure it, I guess. But I would also say that at some point, you need to make those choices. Like probably EFSF itself shouldn't have been AAA in the first place. It was probably a mistake. I think it would work fine if the EFSF itself was a AA vehicle. Whether that threatens, some of the AAA countries, I think they'll be certainly keen to make sure that that's not the case. But there's a risk there.